Welcome back to the weekly portfolio updates. Currently, the stock portfolios are sitting at a combined value of around $26,000 Australian. The stake portfolio sits at 13,419 USD, which is just over 20,000 Australian dollars, and my Vanguard portfolio sits at just over $6,300. Looking through the portfolio, not much has really changed since last time. It is down on the day, but realistically, nothing has really happened. Overall, today I wanted to go through Tesla's recent earnings and the coming shortfall, and also a bit more information about Google and what's going on at the company around the compensation and them putting their campus on hold. First, going through the portfolio, not much has changed in my stake portfolio in terms of I have not bought anything or no recent transactions such as dividends or anything like that has come through. Looking at the overall market, in the last week, it's been pretty steady. It's gone up and down, but it's traded pretty flat. In regards with my main positions, such as Apple, everything has been pretty similar with the overall market, and not much has happened. With my Vanguard portfolio, I did deploy some money again, and I will actually be purchasing a larger share into Vanguard's multi-index international shares ETF, which I already have a position in. My VHY position has stayed the same. I recently added more to my VLC position that is now over $3,775, and I'm also now adding $600 into my Vanguard VGS ETF. This ETF just kind of tracks a very, very broad market. It holds companies such as Apple, Microsoft, Tesla, more of a worldwide ETF. As you can see, it's mainly held with the tech companies and the major players around the world. It does have a lot of positions and it is extremely diversified. And as someone who is investing in Australia in Vanguard, it is harder to get positions such as Apple and Microsoft and all of those big tech positions, which I do own in my stake portfolio, in my Vanguard portfolio. So that is one way of exposing myself to that and diversifying away from the Australian market a little bit. Overall, with this portfolio, I did have some dividends come in as of late, such as the $12 one, $5, $2, and $6. It doesn't seem that big, but I've seen them grow, and that's the main thing. In regards with the news I wanted to touch on today, the main one I wanted to go through was Tesla's recent earnings. As it says here, the shares fall nearly 10% after earnings declined from a year ago's quarter. As you might have seen all over the news, Tesla's shares dropped a huge amount. This resulted in, I believe, a $13 billion loss for Elon Musk's net worth, which you might have also seen online. In regards with the earnings, it is a bit of a mixed bag. It came off very negative, but after watching a few more people discuss through it and kind of go through the results, whether it's economic issues, things with the company, it does paint a bit of a better picture in regards to what's actually going on at Tesla. And yeah, shares of the electric vehicle manufacturer Tesla fell nearly 10% on Thursday, a day after the company reported a more than 20% drop in its net income and EPS compared to the year ago quarter. Tesla reported a net income of $2.51 billion for the first quarter of 2023, down 24% from the previous year. And GAAP earnings per share of 73 cents, down 23% from the year before. Elon Musk also suggested that the company would prefer higher volumes to higher margins, a comment that prompted some concern from analysts. If someone is invested in Tesla, I'm sure you've actually been through all the ups and downs that this stock actually does bring. As someone who used to actually invest in Tesla, and I do actually have an interesting story of my position in Tesla, it is an extremely volatile company. 10% movement in Tesla it's not something you want to see, but it's something you can almost expect. The way the stock moves and the way it's traded, you can see down 14% in the month. But look at the last 3 years. I was actually someone that invested in Tesla. This was pre-stock split. I invested and I had a decent chunk of my whole portfolio in it. And then it actually doubled. So I got 100% return and I sold out. And I was you could say I was lucky. I sold it around here, I believe it was, or even earlier. It was in this range. And obviously the numbers were a lot different. I think it might have been close to like $1,000 a share before the split, something near that. But yeah, it's a position I used to hold. The reason I did sell out of my Tesla position is not because I don't think the company will do good in the future. It's just the volatility and the valuation. I mean, at the time I doubled my return, so getting 100% return on a stock, you need to remove the emotional side of it and kind of see the logical side, which I did. And I was very happy that I sold and I took a decent sized gain from it. But in regards with investing in the company for the future, I still think it's a massive bright spot for America, for the world, getting these EV cars, and I think it's still going to be a great company. And even if you go through around kind of like the micro factors around it, Tesla has cut the US prices 6 times since January. And even you look through the models, they're still in high demand, even though they might not be selling as much. You see certain things and kind of like the prices issues. There's a backlog on stuff. I know here in Australia, people are trying to buy new ones. There's been issues with that. But as a Tesla investor, it's just kind of something that comes with the position. I think people are aware of that who are long-term on it. Again, no one wants to see a negative earnings report, but yeah, the stock will probably bounce back up. That's just how the stock is. You can see after it trades down, it trades back up. It's just a bit of a mixed bag, and it's probably a bit volatile for something that I want in my portfolio. I did used to be really heavy into tech, but I am moving away. And you can see, I think the money that I actually got from selling, that I did invest into the likes of Costco and Microsoft. So I think those were 2 positions I used it on. So yeah, that just tells you a bit more of why I personally moved away. But as someone who's not a Tesla investor anymore, I don't look at it as much as I used to. It's always good to keep your eye on it just to see how things are tracking. But yeah, it doesn't look like the best earnings. I know there was stuff around SpaceX as well with their the recent launch. That got a bit of controversy if it was a success or not. I think the data and stuff they got from it, and it was actually a good launch in my opinion. People didn't seem to think the same thing, but I guess that's for another day. And another major company that I actually do hold a small portion of is Google or Alphabet. There's a lot going on at the company at the moment, and there's a lot going around big tech, but the first thing I wanted to go through was actually this report. The Alphabet CEO topped over 200 million in 2022 for his compensation. Sundar is a very popular figure, especially you see around tech. And yeah, the way Google's stocks performed, ignore the last year, but look at this run up that it had. I remember it was up like 50% and an amazing run. And yeah, Google was getting all the praise. Everyone wanted to be invested. That's just how it was. And that's what happens. And the last year or so has not probably been the best for investors. I know I've been in the stock, but yeah, you see down basically 12%. You see the ups and downs of the stock. Yeah, it just has not been a good time for investors. Lots of cost cutting, lots of stuff going around in the tech world, especially post-COVID. Hiring too much, a lot of middle managers, a lot of stuff that they're trying to get to the bottom of. Same with the likes of Meta, Apple, Microsoft, Twitter. All the big tech players are going through the exact same thing. But yeah, he did take home a whopping amount of money, especially for someone who's, I'm sure he's not shy on it anyway, but it is interesting when you see the cost cutting and then you see someone like this making so much money after they're trying to cut costs. But again, if he makes the decisions and he makes good investment decisions, the board backs him, that type of thing, then yeah, it is what you kind of expect. His annual salary was only 2 million, but that's when the stock compensations start coming in, and everyone knows that's where the real money is. Kind of in the long term with these tech companies, they'll offer you a job, but then it'll say you'll need to be here for 4 years to get the full compensation package, that type of thing. But yeah, that is interesting. And on top of that, you see Google's actually pulled back on the new campus that it was actually building in San Jose, which is again surprising when you see kind of the money that's being handed out, but then you also think of the economic factors of a lot of people working from home now, hybrid work. Is this kind of stuff necessary, especially with a company that has offices all around the world? Yeah, the CFO said that the company's last earnings call that Google is expected to incur costs of about 500 million in the first quarter to reduce its global office spaces. And then you see this, and then them putting it on hold. And you completely understand. In June 2021, Google won approval to build an 80-acre campus, spending 7.3 million square feet for an office space in San Jose, California. the third largest city in the country's most populous state. The estimated economic impact of 19 billion. And yeah, as it says in this little one, the timing couldn't have been worse. And that's, again, that is true. You did see the massive growth around that COVID time of people investing. Even when people were working from home, it was like stocks couldn't be stopped. I mean, yeah, you look at Google's results. Look at this run up during COVID, all of this, and then that just downpour that's been happening now. Things have kind of leveled out, but yeah, rough time for all the tech stocks. Even, yeah, like you look at the index for it, the QQQ, and that kind of paints the picture for how everything's going. Look at that. Just volatile up and down. You see this year's kind of pulled back up, but again, looks just like the Google graph, basically identical. That's just how it's been trading, and that's something, as someone who's invested in it, it's a very small position for me. I did sell out a bit of it, but it's not a major player. I mean, do I think the stock's probably been hit a bit too hard? Potentially. It has come back up now, but when it was around that 90s, I thought that was actually a decent price to get in. You look, see in the 90s, even down here when it goes into the 80s, I didn't think it was too bad, but yeah, it's just something that investors have to factor in, something that the companies have to factor in with them going forward now with all the different changes, the economic factors. For my investment side of things, I don't think I'll be putting any more money into Google anytime soon. Still think it's a great company, just not exactly where I want my money to be at the moment. You can see I'm down a decent amount on it, but it's not. Same with Amazon. 2 tiny positions really doesn't affect me at all or affect the portfolio much. In regards with what I'm going to be doing, I will be investing a bit more money into my stake portfolio soon. Probably just going to buy a little bit more of VOO, and then yeah, look around, maybe some more Costco, maybe some more Microsoft, just kind of like my basic positions that I'm growing. I know everything's gone up, so it's not, I haven't been investing as much as I was when things were a bit cheaper and there was a bit more of a dip. At the moment, things have kind of shot up. I don't really want to be investing right now, but again, it's long term. I'm not thinking about the next year. I'm thinking about the next 5, next 10, that type of thing. Same with my Vanguard account. This is not a account that I'm just having sat here for the moment and just looking to trade. This is something I'm trying to build up. The goal was to get this to 10,000 before the end of the year, and I'm going to be well on track to get that. The goal was to get the stake portfolio over 20,000 Australian dollars, which I've now hit. Probably try to get up to 22, maybe 23, 24. But yeah, the goal is first to get this Vanguard account to 10,000 and then save up my actual cash for personal reasons like saving for a house, that type of thing. But yeah, the main goal is to get the overall portfolio value to around 35, hopefully 35,000 before the end of the year. And I think I'm well on track. So especially with dividends getting bigger, hopefully the green stock market keeps going up. But that's just a bit more of an update, a bit more information about Tesla and kind of my thoughts on it and the whole situation with Google and what's going on with them. That was just a quick update. Leave how your portfolio is going in the comments, but that's all. Cheers.